Let me see if I can make this bigger. I don't know. We're live. That happens every week. You're just like waiting on it, and suddenly it's just there. Hi.
Hey, I'm Dart.
I'm Lisa.
Yeah.
And this is our dear friend Suzette.
Hi, guys.
Go ahead.
So, welcome this Tuesday. If you were with us last Tuesday, we had a great time at the Gaylord Opryland Hotel. And so you can go back and watch that if you hadn't seen that. Lisa was, we got to see all of her excitement about the Christmas holiday. Yeah, me too. Yeah. But you're like, you're just excitement abundance.
I know, that's why we're going every week, aren't we? We're going there every week to see the lights.
That's right, yeah.
I love it.
Yeah.
I'm going with you on the next trip.
Yes.
So, right. So, but we're just inviting you to join our adventure, enjoy life and finances and relationships. And we want to shout out to McKenna,
Whoop, whoop.
who is our wonderful hall monitor. And so she's watching the comments for us and helping us out. And so glad she just signed in. And so she's saying hey to everybody.
We love you, McKenna, and we miss you in person tonight.
Yeah. So she's doing her daughterly duties.
Yeah, she's such
taking
a good
care
girl.
of her parents. So.
She's awesome.
Yeah.
Love her. But, well, I've known Suzette for quite a while. Well, actually, you know, my personality, I didn't know where we were going to say this. I'm just going to say it. My personality, like, I didn't really have a lot of girlfriends. I just felt like women are a lot of drama, and it gets on my nerves. And so, but I knew that I needed women friends. Well, we can be real here, right?
Yeah.
Okay.
We're going to be real here, folks.
We're
Okay.
gonna be real, right?
Yeah.
So I knew that I needed women friends, but anyway, so there was a group that was starting here called Polka Dots, and it's women just empowering other women and other women who are in business, and it's really cool just to support each other and get to know each other, and knowing that you know you have things in common. You're not in the same kind of business, but yet you can send referrals, but yeah, like if you're going through something in your business, then you could reach out to the other person and be like, what do you do about this, or you know. And through that, I've really met some amazing friends. And Suzette was one of them. And so, yeah. And then you're going to get to hear about her expertise. She's amazing. She's like a wealth of knowledge about mortgages.
She certainly is. And so, from a financial planning aspect, we always look at helping people with relationships, health, and wealth. We take a unique approach to helping people with finances. And so we love, as I've said before, working with team members. And so there's a lot of people that need CPA, attorneys, and one of our team members is a mortgage person because that is so vital. There's no sense leaving money on the table,
Right.
or paying more than you should. So, and we like working with Suzette because we can. It's because we work with the whole big picture. It's not just trying. It's how can we make your life better and solve problems, and it comes back to relationships, health, and wealth. And so if we can save money, then we can grow wealth or have more fun or go see the grandkids.
All of the above.
That's right. Yeah.
Or Opryland. Okay.
Yeah.
Multiple trips. Okay.
Or stay the night. Get
Right.
a suite. Yeah.
There you go. With the money you save, refinance your mortgage.
Rooms are so cute. That's right.
So, Suzette, we have a broad range of people that join our show, that love our show, that watch us from all states, and so we're glad to do that. So let's just jump into it. So we have from the young to the middle age to nearing retirement age.
Absolutely.
And so, but let's just start with the first-time home buyers, and how important is it for a first-time home buyer to go and get pre-approval?
Well, that's super important, especially in our market here in the area, and which is kind of going on everywhere for 2020 being such a crazy year. The mortgage and the real estate business has not slowed down. It's been exponential because we are historically low rates. Right. Today, quoting 2.5 on a conventional rate with a good credit score. That's just an example. So to start with the first-time home buyers, the first thing they need to do is you need to get a pre-approval. So people get stressed about this because they're like, oh my gosh, I don't want you to pull my credit, because they think it's going to take this big hit on their credit. If you have one lender look at it, we all do it the same way. The couple things that they don't know when you're doing a pre-approval We pull all 3 credit bureaus. Every lender, bank, mortgage company, we're all the same. We pull all 3 of your bureaus, and if there are differences in the scores, they don't use the highest, they don't use the lowest, they use the one in the middle. But, that's the place to start, to go in, get pre-approved, be able to have your mortgage person tell you, hey, this is the best product for you. Compare first-time home buyer programs. There's different types of loans. There's conventional, there's USDA, THDA, there's VA loans. There's a variety of different loans, depending on each person's circumstance.
Right. And all these different loans have different sets of rules.
Absolutely.
And different things apply. So
Yes.
that's why it's kind of to look at the individual.
Yes.
Nothing is typical.
No, every person has a different circumstance,
Right.
so we can kind of generalize. And if somebody goes, "Oh, I've got a super high credit score, I'm just looking to refinance," I can give you a ballpark, but until we see credit,
Yeah.
it's a guesstimate.
Yeah.
Just like finance.
Debt to earnings. And
Yes.
all these kind of things.
Debt to
play.
income,
Yeah.
things like that, play a part in all these programs. Even the first-time home buyer programs, there are some that give them 100% money, but it depends on income and debt, and those are real rigid, where there's some flexibility with other programs. So it just
Right.
depends on what your circumstances are. But the first place, get a pre-approval. Get
Yeah.
somebody, pull your credit, look at it, tell you what program, give you some ideas on numbers, so you know what you qualify for before you go out and fall in love with a $300,000 house, only to find out
Right.
my budget says I can only do 220. Then you're going to be disappointed. So
Right.
you're shopping for what you can afford and getting in the market and building equity and value, in your life. So
Well, and something else that you had mentioned about it being important that you're pre-approved, because when you go to make an offer, that makes a difference, right?
Well,
That's
it
important.
does. It's a couple of things. If you're pre-approved, and in this market, there may be, like, I just purchased a new home, 8 weeks ago? They had like 4 offers on the house. And so my approval was strong. It was the first offer in. If you come in there and say, yep, my offer's here, here's my pre-approval, my lender has checked my documents, you're going to be far above anybody else that maybe doesn't have a pre-approval, and it's not as strong of an offer. So that just helps them, helps their agents, everybody.
It's all about closing it.
It's all about closing. Absolutely. But you have all those things in a row, you're able to close sooner too,
Right.
So
Right.
it all starts with a good pre-approval. Yeah,
Right.
Absolutely.
Hey, we have to give little shout outs because our screen is not rolling up, but we want to say Norma's on here. You know Norma?
Miss Norma.
Yes. I want to say hi to Jill. Glad that you're always with us. Mel, good to see you from Texas, all the way from Texas. Priya, love you, girl. It's a good week for you. Of course, we love you too, McKenna. You're amazing. You're awesome. But yeah, I'll try to keep up with that, McKenna. I promise. I'm gonna try to keep up. Like I can't just like look down and scroll, and yeah, I'm trying. But yeah, keep us on track, babe. Keep
Okay.
us on track.
Keep us on track.
Yeah.
We get chatty and we get off track sometimes.
Imagine that.
I know.
Yeah, with my comments.
So does everybody need 20% down? Is that the standard?
Oh my gosh, no. And so many people think that that's the case. No, there are so many different types of loans, okay? Conventional loans, you can do as little as 3% down.
Oh wow.
3%. So, anywhere from 3% down, we've got a phenomenal product that's 5% down and a one-time mortgage insurance payment, so it's not in your payment.
Wait.
Saves, yeah.
Okay, so you just brought up a new term that a lot of people may or may not know.
Correct.
Mortgage insurance, you might hear it say PMI. PMI does not
Yeah.
stand for, pardon my ignorance.
I love that. Oh, you've never heard that.
Make it up.
I love
Pardon
it.
my ignorance.
But yes,
So
okay.
what is PMI?
Okay.
And then we'll get
Yeah.
and then we'll get back to that.
Yeah.
If you just explain, what is the
Well,
PMI? Is
okay,
it good,
so
bad? What is it?
well, it's not. It's neither good nor bad.
Okay.
If you don't have the standard 20% down to put down on a mortgage, then it's two things: private mortgage insurance. That's what it stands for. Okay. It basically that protects everybody involved in case of a loss on the house because they don't have their 20% equity. So that's why they get charged. So that feeds into, getting pre-approved, knowing which product is the right product for you, and then I was starting to get off track because we have a product that you can put on a conventional 5% down and not have the monthly PMI. Yes.
I love that.
It is a fabulous product. It doesn't affect your rate. So there's all kinds of good stuff. But again, everything is depending on the people, where they fit in on it, and what product is right for them.
Right.
Yeah.
I love that. Does that make sense, everyone? If
Hopefully.
you have a question, hop on the chat.
Yeah. On the chat. I think McKenna's going to put my number in the chat.
Yeah.
And if you guys have questions on anything, happy to answer. I go over all that stuff with people. If they do a pre-approval with me, I kind of explain what that looks like, because how often do people buy houses? Not every day.
Right.
So, a little information so you know up front kind of the things. And I do want to say, one of the things that they don't understand sometimes is there's down payment on the loan, but there's closing costs.
Right.
Two separate things that
Yeah.
people don't realize. But again, if you get a good realtor, hey, I know a couple. Hey, Norma. And a few others. Okay, I know Norma's on here, so I'm going to say hello to her. But I know plenty of, realtors that can help them when placing an offer. Closing costs is something you can try to get the seller to pay
Right.
as long as they...
It's negotiable.
It's negotiable, you know what I mean? And depending on the product for your loan, some of that we can go from 0 to, whatever you want to put down.
Rolling closing cost in, or
Yes, absolutely. So there's different ways to do things. You just have to get with somebody, mortgage professional, realtor, and have them help you figure out the structure and how to do it so that you go in with your best offer, what's going to be the best for your client, and know this is what I'm looking at on my mortgage.
Absolutely.
Yeah.
Absolutely. I love that. Oh, and hey, Melissa, good to see you. We have some regulars on here, and we love y'all. Sometimes things are crazy, but you know what? And tonight, y'all, we're all drinking coffee. It's freezing cold here in Nashville.
Chilly.
it snowed yesterday.
It snowed yesterday. It's crazy.
Yeah, I'm not celebrating. Okay.
Yeah.
No, I'm sorry. I love you. No.
Well,
I love her.
it was-
I'll go to Opryland with her,
yeah,
but I don't
it was
really want
better
snow.
than the last. Yeah.
Sorry, it's
Well,
cold. Okay.
It's cold.
It's cold.
Okay.
So,
Oh, let's get back
so let's
to,
roll back to
Yes.
So FHA, Fannie Mae, conventional loans. What's
Okay.
all that? What's all that mumbo jumbo?
So there's all kinds of different loans, and so here are the typical loans. Fannie Mae and Freddie Mac are the two systems that everybody uses to get a mortgage loan approved. Okay, we've all heard their names because of all the stuff. Pretty much anybody. So it doesn't matter if you're doing a conventional loan, an FHA loan, VA. We all run it through their system depending on the loan type. Okay. FHA loans are typically designed for their government insured loans. So let's start with that. It's a little bit different than a conventional loan. They're government insured loans, and that means that first time home buyers or people maybe with a little bit lower credit scores or need to explain some stuff on credit, or have had circumstances, that loan is basically kind of made for that type of buyer, I guess is the best way to say it.
Right.
That it's a more flexible loan as far as some of that stuff goes. Okay, so and people don't realize, if they go through a bankruptcy and had a life experience or had something that happened, you can get into an FHA loan in a couple of years where you have to wait like 5 years to get into a conventional loan.
Wow. Are y'all hearing this?
Yeah,
Are you catching this?
Yeah,
So
so-
if you've gone through some hard things, it doesn't mean
Doesn't mean you can't buy a home.
Right.
It absolutely does not. You just
Right.
need to know the time frame. And in bankruptcy is if it's a Chapter 7, it's 2 years from the date of discharge. People think it's from the date they filed. It is from the date they dismissed it. That
Right.
But those are things again. Call, ask questions can help you with some of that stuff and get you set up for something.
Yeah, and and another thing is that this industry has been in major changes since
Yes.
2008,
Yes.
and so things change sometimes quarterly, sometimes monthly, sometimes
That's so
daily.
funny, Dart. Like
But-
all the time, like
but-
I get
yeah,
daily
yeah.
guideline changes,
Yeah.
especially,
Yeah.
has anybody heard of COVID this
Yeah.
year? So yeah, that's changed a couple of things like on a weekly
Right.
basis.
So, but the point of bringing it that if 6 months ago or 6 years ago you had a conversation and
Yeah.
you didn't like what you heard or you were told no or something like that, is that it's like in 3 months it could be a completely different story.
Right.
Oh, absolutely,
Yeah.
Right.
absolutely.
Yeah.
And
Because
you know,
new packages.
I'm
new
going to say
offers,
this, you know, let's touch on one thing that's going on a lot this year that people do not understand. You know, there's, like I said, we were talking about the FHA loans. That's a government loan with this, let's kind of stay on track, then we'll hop to, I want to talk to you about the forbearance situation that's going on this year too.
Right.
So,
Okay.
so FHA loans, like I said, are designed for a 3.5% down payment. Okay,
Not bad.
mortgage insurance is set like this monthly. It's this, and it doesn't matter if your credit score is a 640 or 700. It's still the same. So it's very, you know, it's very friendly to people. You know what I'm saying, with those moderate scores. You know, and so that's what kind of a government FHA loan looks like, and they're government insured. Okay, so the conventional loans are just that. They're just a regular loan. Depending, you know, we offer products from as little as 3% down all the way to putting a client putting over 50% down on a purchase. So depending on people's circumstances and different programs for that, depending on, again, your credit scores, your income. They give reduced MI for some of the loans that only put 3% down. We've got one you put 5% down. It's one-time payment. You're not paying it in there monthly, which saves you some money, and it's nice.
Right.
And it's a good option.
Right. And don't we have, you know, sometimes you think, oh, my credit score is not that great. But then, you know, talking to someone like Suzette or us, you know, there are some things that you can do, some simple, small,
Absolutely.
minor things
Right.
you could do that would really bump up your scores,
Right.
just not knowing.
Right. Don't go and start doing things on your own without learning the rules.
Right. Well, and sometimes people think, oh, I have to save all this down payment and do this, where, you know, they have a chunk of money in the bank, we can look at it, and they could pay off $800 in monthly debts a month and only increase their, you know, their mortgage for $100 at 2.5, 2.625, depending on what, I mean, I quoted FHA rates today at 2.375. They're just crazy low. We are historically low, and there is not a better time to buy, refinance into those products. You know, VA loans are the same thing, super phenomenal rates.
We're going to get back to that refi.
Yes.
What did you want to mention before we moved on about the forbearance?
Well,
thing?
and that's the thing with all these things that are changing with COVID. A lot of people have had unfortunate circumstances, okay, and they found themselves putting their homes in forbearance. And one of the misdemeanors or the things that people don't understand, they call whoever's servicing their loan and they say, oh, you know, it won't do anything to your credit. Well, it won't report your credit late, but you have, you know, before you can go refinance or purchase a new home, you do have to make 3 consecutive payments and have it out of there. And people don't realize that. That's a big, you can still do it. I can still refinance you, but you just have to get those payments made in
Okay.
order to do it. So that's
Good point. 3
something
months.
I just want to share with people that feel like, oh my gosh, I put the house in forbearance. Oh my gosh, I won't be able to refinance. Again, not true.
So let me show my ignorance. So
Yeah.
forbearance versus foreclosure.
Okay, so forbearance, you know, and I don't work in loss prevention, but forbearance gives people some forgiveness, job loss, unemployment, temporary, those kind of things, to give them a reprieve for a certain amount of time. Okay, what people don't understand is lenders still have to pay the people and pay those payments for them
Right.
while they're not paying them.
Right.
But things happen in life, and so, you know, if you find yourself in that position, but then you're not having to go into foreclosure, you know, because you can't make your house payment, it's a good way to help you if you knew you got to temporarily and then get back on your feet, start making your mortgage payments. Obviously, foreclosure means that you can't meet those obligations, and they're trying to be really generous with all that's happened with COVID. I think most lenders are being pretty generous about that, but you really, if you're considering it, again, talk to somebody to see if that's your only option before you jump and make that.
Or just don't walk out. Yeah.
Right, don't give up and don't walk out.
Yeah.
A forbearance is better than letting it go to foreclosure.
Right.
Call them, work it out with them, until you get back on your feet. So those
Right.
are just some things
Right.
that are going on with what's happening in our
Right.
in our world right now.
Right.
You know,
I mean, it's just new
Yeah.
options that are
Yeah.
out here that.
right?
Well, I mean, in our practice, we say there's two sets of rules. There's the rules for the informed and the rules for the
Yeah,
uninformed.
yeah, absolutely. Somebody will let their house go to foreclosure because they may not know. You can pick up the phone and ask for that. I think they've done a good job this year letting people know. I
Mhm.
think people just think it's free money from the government. It's not, and
Right.
that is something people do need to know the pros and cons of what that stuff is, you
Right.
know? Absolutely.
Absolutely.
But it is an option out there, and I just want to touch on that real quick. So
Sure,
got us,
right.
got us off track there, but
No,
yeah.
No,
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 that's fine.
it's important information. So
Yeah.
now, on to refis.
Oh, wait, that's just the fun
My favorite topic. Okay.
Yeah,
We all love talking about that.
right, yeah.
What do you want to know about refinances? Just tell me what your
Yeah, so, you know, it's somewhat, because we get a lot of questions
Yes.
from a lot of friends,
Yes.
a lot of clients and stuff, you know, should I refi?
right.
And so, I mean, and we just look at, first,
Right.
the easy thing is look at the interest rate. And if
You
it's
look at the
3.5
interest
and
rate.
above, so.
Well, yeah, right, pretty much. I mean,
Yeah.
and you know, and you and I,
Sometimes
we
4.5,
work together
yeah.
good because you can send me your client statement. I can talk to your client. We can get questions. We can look at what their taxes, insurance, what their payment is, and see what their savings will end up being,
Right.
and be able to see when they would net their result for, you know, but. Pretty much like you're saying, anybody over north of 3.5, that it might be, you know, 3.75. They definitely need to look
Right.
at it and see, because with rates being so much lower, I
Mhm.
mean, you know, we've got rates at 2.25, 2.375 on
Right.
VA, FHA. You know, market changes daily on rates, but they've still been
Right.
super low,
Right.
and even conventional products. I mean, are just, they're all in the low twos. They're just crazy low. So it's
Yeah.
worth looking at and having somebody make you a plan and run the numbers and see if it works, you know?
Right.
Yeah.
Absolutely.
And isn't that where you like to get creative and help people pay off some debt? Or,
Absol-
you know, they're paying higher interest rates.
Absolutely. I mean,
This
you
goes
know,
back to
for-
making their life better.
correct.
And looking at the whole picture. and
Correct.
how can we get away if you have some higher interest rates or anything like that?
Correct.
So,
Yeah, I mean, and there's things like combining first and second liens on like home equity and, you know,
Mhm.
and I don't always recommend that, but if it's a larger home equity loan that they did, oh my gosh, I'm
Right.
doing one for a client now. I'm saving him $800 a month. Okay,
Right.
Wow.
it's just
Yeah.
and you know that's considered a cash out refi.
Right.
The rate's a tiny bit higher, but
Yeah.
it's saving him $800 a month. That's
Right.
crazy.
That
Okay,
is
you know,
crazy.
so
you know, and so I can tell you a quick little story. You know, over 10 years ago, we had some people come in, and it was a cash flow problem. They had
Mm-hmm.
money, they had a great debt to equity and so forth, but like a $20,000 HELOC was just eating their cash flow up.
Mhm.
And so we were able to help them get a refi and get things squared away. But they came in, they weren't sleeping at night, they weren't
Yeah.
and so forth. You know, I mean, they were stressed out just because it came down. It was a cash flow problem.
yeah.
But all their friends at church were saying, "Oh, it's only 4%. Don't give up that rate." You know, now this is 10 years ago, which 4% 10 years ago was great.
Yep.
You know, but that 4%, like I said, $800 a month, putting a dent in their cash flow
Right.
and so forth. And so by just sitting down with us and working through a refinance plan, all of a sudden we opened up the cash flow. We got their life back on it. And so when they came back in, I said, "So how are you sleeping?"
Yeah.
Yeah.
You know,
Yeah.
it's like, yeah, okay, we're
Right,
it's
absolutely.
and so sometimes it's just the little things to get them on
Right,
the
and
track.
I know when people talk about doing refinances, people get a little, and first-time home buyers, a little bit worried about having credit pull. We need to touch on that.
Yeah.
One inquiry from one lender is going to be okay. It's not going to drop your credit score. Everybody has been kind of pounded into their head that, oh my gosh, well, no, don't call 10 lenders and have them pull your credit.
Right.
Yeah.
That's like going to a car dealership and going, please send it to every bank. You know, it's the same theory, but have one person pull it, then you know what your credit is, you know, and you know where you stand as far as what your
Right.
credit scores look like. Because I tell people, you can look at Credit Karma and some of these sites. They're not going to be the same. They just, that isn't a lifetime what it usually is. It's close, but it's never usually perfectly accurate.
Right.
And people don't realize there's 2 scores on there. We pull all 3 scores, and everybody does it the same way. So, that's just one of those things. It really doesn't do, one inquiry isn't going to hurt you. And then I can look at it and make sure your debt's good, because you're talking hypothetical until we look and put all those pieces together for people.
Right.
Yeah.
Right. Well, what? Oh, you want to bring up the next subject?
So let's talk about something that's near and dear to my heart: veteran loans.
Are you getting emotional?
Well, she knows that that's my favorite kind of loan too. I do a lot of veteran lending and love helping vets. So VA loans are phenomenal. The rates are super low. They do 100% financing, guys. I want to say this, what I've discovered is a lot of veterans don't think they could, if they did a VA loan 10 years ago or 5 years ago, that they can do another loan even though they paid that loan off. Yes, you can. It is a benefit they can use over and over again. If they're moving from another state and need to buy a house and they had a VA loan up there, we can get a new VA loan. There's lots of, there's lots of little things. Disabled vets, you don't pay a funding fee. This is shocking to people.
What?
Even if you get a little bit of money from VA, you're exempt from the funding fee. But there's no monthly MI, and now they've just removed the caps off of their loans. So if you can qualify, I did a $1.5 million VA loan for somebody moving into the area.
They got a good rate.
Well, they got a good rate. Now, their rate was a little bit higher because it's a super jumbo loan. Okay, but when you don't have to put money down on a $1.5 million house, that's a lot of cash flow.
And no closing costs for veterans.
So at our bank, we waive all underwriting fees. Our bank does not. Wow. That's our thank you to veterans. We do not charge you underwriting fees. We waive all that. On average, saving you about $1,000 in fees, $1,200 depending on the different lenders. And yes, rates are super low. We try to save you money on that. Some other things about VA loans: you can do cash out up to the 100% of their value, and the rates are still phenomenal. I want to touch on one other thing. Sometimes people think, let's just say you had a VA loan 20 years ago, 15 years ago, 5 years ago, and it went into foreclosure, and you had a loss on the property. VA will do another loan for you.
Oh, wow.
They will.
Wow.
I've had 2 or 3 veterans, and we were able to get it approved. As long as it's been more than 2 years, they'll do another loan for you.
Right.
Yeah.
Well, a veteran, they've served our country, and I love that.
Absolutely.
That they get to have some break. I mean, we live in a free country because of them. And
absolutely.
So, that's just a little way to be able to pay them back. I think that's amazing.
So I know a veteran who is remodeling part of his house to get so that he can get a 20% equity.
Makes zero difference on a VA loan. Zero. So there's no reason to try to wait to do that with these rates. I mean, I'm doing a purchase on a new one. They had really good credit at 2.25 a few days ago. I locked it in.
Right.
What? Okay.
Yeah.
So
wow.
It's I'm just kind of giving some examples. Rates change daily. I got to say that for guess all the legal things. Full disclosure. Okay, call me. I'll give you rates. Okay. But there's no mortgage insurance, so
interest rates are not going up in a while.
Right.
So, I mean,
exactly. So he doesn't have to wait to try to worry about having 20% equity. They do 100% financing. It doesn't matter.
It appraises.
It is one of the best loans because I love it. I love that we do this for people who have served our country and are able to do this. So there's lots of little nuances with the VA loans that you can have 2 VA loans at the same time. People don't. Again, those are call me for questions and I can answer questions and walk you through your circumstance because everybody does have different circumstances.
So if you know a veteran, then
we've got one on here, Mel.
Yeah.
Hey, Mel.
Yeah. So share it to your veteran friends. Because as soon as this is over, it's posted. You can rewatch it, It stays up all the time. So, but share,
Absolutely.
share this with your veteran friends,
Yeah.
because
Yeah.
we want to help them.
You know, I had something happen. The first house I ever bought years ago, I think I was like 19, and the gentleman who owned the house he had a VA loan. He was a postmaster, had passed away. The house was going into I was up on auction, and I just so happened to win that bid. Thank you, Lord. Anyway, but I was able to get a VA loan because of that.
You can do it. This is a crazy fact that people don't know. You can do an assumption on a VA loan, and if you are not a veteran, that is crazy to hear. But if they let you do an assumption, you can do it. Now it ties up that vet's entitlement. But perfect example: elderly person, maybe went into a nursing home, and his grandson or son or somebody wants to do an assumption. They don't think they can do that. You can.
Yeah.
So there's lots of little things like that you can do.
So another little rule: what about they're just being in the reserves?
Well, yeah, and that's a thing that people don't. If you're a full-time reservist and you have at least 7 years put in, you will qualify. Again, if you don't think you do, you get me your documents. We send it to VA. I check it out, see if we pull your certificate.
Even if they take a break in the middle of those?
Yeah, if you did 4 years here and you did 4 years, took 5 years off and went back 4 years and don't think you qualify for that reason, it's time served. So, the 4 years, it's one of my, what's the word I'm looking for? Because it's late, I'm having coffee. But the accumulated time, that if as long as you have 7 years, you will be able to qualify for a VA loan. I've had to help some people send things in, and I know some magical people that have taught me some magical rules with the VA.
All right.
And I, like you, because I feel very passionate about VA, and I'm involved in some VA charities and things that mean a lot to me. That I will go above for anybody, but you know what I mean. Like, my sweet little old man that came in, he was a veteran that was 80, and I did everything. I mailed letters for him. I did all the stuff with VA.
Yeah.
Sometimes, but it's
navigating the waters.
It's navigating the waters, and everything's like you said about information. Are you informed or are you not informed?
Right.
Anything's worth a phone call, even if you think, oh, I've got this crazy scenario, or I'm not sure about this. Pick up the phone and call somebody and see if they can assist you.
Absolutely.
Yeah, absolutely.
Let's talk about that big D word. Nobody really loves to talk about the big D word, and we don't mean Dallas.
Yeah, well, that is definitely.
But you have some really creative things that you do that we don't think about.
Right, there are definitely so. If you guys are going through a divorce or something, first thing I'm going to say is I'm going to give a shout out to Lisa and Dart on this thing.
Wait, we didn't make you get a divorce.
No, she didn't make me get a divorce. No.
We didn't tell you to.
Okay, no, she didn't tell me to either. Okay, I wasn't going to get into the whole personal story. Yes, folks, I got divorced. So anyway, and I want to say that, they were able to advise me and help me with moving funds and doing some things and give me some information that was paramount going through that situation and very helpful with taking care of those kind of things and helping me make some plans. So there's also things on the mortgage side that you can do. So let's just say when you and your spouse or ex-spouse or you guys are talking about this or navigating these waters, which is unfortunate, but it happens. Right. If you're needing to pay them out $50,000 and you're thinking you're going to have to refinance the house to give them the cash or wherever if you've got the equity in the house, there's a way to actually do it with your divorce decree and take that money out and still get the benefit of the super low rate because it's a spousal buyout. So there's just some key points like that instead of doing a cash out refi.
What people really feel like they need to do.
Well, they just think when they go do a cash out and pay a higher rate, so now your rate's a half a point, 3/4 point higher.
It adds up
for the next 30 years versus talking to somebody, finding out that information, what needs to be done, and having, again, it's about information. Knowing that is an option. I've talked to so many people that went and paid off their spouse before they came to refinance the house. if that's part of your divorce decree, talk to them, get them, they can do a quick claim deed, they can get their money out and take care of it all at once and make it as smooth as possible.
Right.
Yeah,
It's a hard time.
Yeah, it is.
Right.
And it's a way that they can do that and take care of that.
Be amicable.
And from financial planning aspects, it's like working out where does the money come from,
Right.
because all money is not the same color.
Yes.
Some is has already been taxed, some is tax invested. And so,
Right. Yeah.
and so, helping, look at the overall picture is like, okay, how can we make it,
Right.
it all out?
Right. And this is where working together, they give great advice that I feel, because I can say, because I'm a client, okay, that they help me through a difficult period. And like you said, and I think it's getting that information so we can work together to help your clients, whether they had a situation and, they're widowed, they've never been through the process before or don't know where to start. That's all part of the services of trying to help people, with their circumstances and trying to guide them down that road.
Absolutely.
But there are definitely some options on the divorce scenario of what they can do, and looking at it.
Right. Well,
Absolutely.
it's something that we always say. If you suddenly have a gallbladder attack, you need your gallbladder taken out, you're not going to perform your own surgery. Well, it's the same thing with finances, with your mortgage. Like, don't try to figure it out for
exactly.
yourself. Just get the information. And, she's an expert in what she does. He's an expert in what he does. You're an expert in what you do, and we'll come to you for the information that we need. I think that this is how the whole plan is to be, that we all help one another in our fields.
One other thing that came to mind that we didn't have on our list, but there's people that want to get out of their job and start their own company, and so like we had a client that he saw that he was going to get out of his job, very high paying job, a year from now, and he had his house paid for. And so I said, well, wait a minute, before you do that, let's look at would a refinance work better for you, being out your house, and so it was his situation, but he was, in my term, he was mortgageable.
Right. Well,
so while he was still in his
high-paying job,
we got everything lined up and so forth, because once he retired and has no income,
absolutely,
or he's getting passive income. So
correct.
Because W-2 income is so much better than passive income or starting your own business.
They keep changing the rules. Thank you, COVID. In regards to self-employed borrowers, and there's a lot of confusion over what kind of income you can use. Self-employed, it's a 2-year rule.
Yeah.
For commissions, averaging your commissions, overtime, but self-employed, we have to average and look at stuff. Now they're requiring 90-day look at your accounts, and that just came out talking about guideline changes. It was 60 till today. So we got the memo today. We were talking about the guideline changes.
So if you think go back and check.
Well, correct. So these are all things. It does change. Things change all the time. It's worth a phone call. And you know what? When in doubt, send the tax returns. Have us look at it. And see what your situation is. Because sometimes we don't know until we see those things. But we can advise you based on that information. So,
Right. Well, if y'all have any questions or anything that you want to ask
well, you
Suzette
can email
while we're on
us
here.
at Dart and Lisa.
No, I was going to say stick it in the chat real quick, but otherwise, we can, you can.
DartandLisa@gmail.com.
Absolutely.
You send a message on the Facebook page, we can share.
Text us.
Yeah.
Text her. Oh, you got my number.
Yeah,
I
did you
think
put our numbers in there?
And McKenna is she's the best. Hold on.
McKenna's on it. Okay, so numbers are in there. But if anybody does have questions or want to walk through a scenario or something that I can assist them with, or something that you just have questions on, give a call. It's this is part of what we do. I was happy to come and talk and help. Because part of my job is teaching people and informing them that they have options. Not everybody does that. I think the more information you have, then the more you know what your options are, and that's part of our service to help other people in the community for sure.
Right.
Yeah.
Absolutely.
And if they want to chat, they can get on DartandLisa.com.
Right.
Click
Right.
let's chat.
Right.
Pop that up.
Absolutely.
Yeah, that's a cool one too.
So feel free, if you know someone's going through a divorce, if you know a veteran, if you know someone that's going to be a first-time home buyer.
Lisa and I don't have that problem. We talk loud enough.
Yeah, but his voice gets really loud and really deep.
Yeah. So, but share this with them. This is a lot of great information.
Yeah.
A lot of new
Thank you,
information.
Susan.
We're in the business, but we're not in the mortgage business. Just like she's not.
I'm not in the
business.
finance business. That's why I called them. That's right.
Why, so another thing we do is like we find experts that we trust, then we trust the experts.
Right.
And so, and so next week we're going to be talking about health. We're going to have a physical therapist on board, and so if there's anything you want to know about any type of pain, knee pain, ankle pain, back pain, shoot us a message because we'll tailor. I've already talked to him, and we'll tailor it to the things that you're interested in hearing about.
Oh yeah.
And this is an amazing guy that he stepped a little bit outside the medical field, and he does physical therapy like we do financial planning. Yeah.
But thank you, Suzette.
Thank you
You're
guys.
just a wealth of
Thank
knowledge.
you. I appreciate being here.
No, we love it.
Yes,
I
helping-
hope that this has helped you all. Just give you a little bit of tidbit. I think that the overarching thing that you walk away with here is you have options.
You have lots
And
of
rates are low.
Right.
Rates are super low. You have options, and if you have questions, give us a
Right.
call. We can help.
Right.
And if you want to, have Dart talks up and over, and this is why we all work together here. But I'm glad to be here. If I can help anybody in any way, please let me know. And
Yeah.
I appreciate y'all having me here.
All right.
You're facing that.
So, McKenna, thank you again for being our hall monitor.
Yeah, we love
Yay,
it.
Suzette, thank you for being here,
Thanks,
and
guys.
thank y'all for showing up and being a part of this and just joining our adventure. So
Yeah.
we will sign off and see y'all next week.
Bye, y'all.
Bye.
Or we'll see you next week.
Next week.
We'll be here next week. We might go do something fun in the meantime. Stay tuned. Bye, y'all.
Bye.